Most people don't even have financial plans. They just really have a collection of accounts and some random insurance maybe they picked up from a sales guy along the way. Today, we're going to talk about what is financial planning, what's in a financial plan, what do you even talk about when you do financial planning. Stay tuned for more.
Welcome to a Wiser Retirement Podcast, where we cut through the noise and bring you real, honest conversations about investing, retirement, and building lasting wealth. No sales pitches, no gimmicks, just insights to help you stop guessing and start planning your financial future.
Welcome to a Wiser Retirement Podcast. I'm Casey Smith. Today, I'm joined with financial planning associate Grace Kennedy. Hello, Grace.
Hey.
Today, we're discussing how financial planning really works here at Wiser Wealth Management. What do we talk about when we go through planning? I think this would be a great intro to kind of profile what comprehensive financial planning really is and what it isn't, which kind of reminds me a little bit. I got myself into a situation. Okay. Not really a situation. You know, I like poking the bear.
I know.
Do you? You learned this about me?
Maybe along the way.
I don't mind poking the bear. So there was this post on LinkedIn that got served to me. I'm not anyone's friends that posted this, but it was a young man who said the journey to be a financial advisor is really kind of two things. You can go to school, go to college, major in finance or financial planning. You can get a job as a planning associate. You can go get your CFP. You can do some plans. You become a associate advisor, and then eventually you become a senior advisor.
Okay.
Right? Sound familiar, Grace?
Yeah.
It's kind of the track you're on.
Yeah.
Or, and it's like a whiteboard he's written on. He goes, or you can skip all of that and just be really good at sales.
Oh. I think I know which one he went. Or I did sales.
Right. So your reaction of like, oh,
yeah,
is a normal person's reaction. And you would read that and go, ugh, that's whatever. He's selling insurance products.
Yeah.
Mostly.
Well, someone in the industry and thinking of it as, what if he was my advisor? I would still be like, oh, right. I wouldn't like it either way.
True. Okay.
Yeah.
Good point. So most people just keep scrolling, right?
Yeah.
Well, I
didn't.
I didn't keep scrolling.
You can't possibly do that.
No, you can't do that. And so I had kind of a long little, I was like, yeah, I mean, that sounds like the easy way of doing it, but, or you can, take the harder path and actually be educated in tax and estate and learn how all these things work together.
Yeah.
Not sell anything at all and just give solid advice to help people live better lives. Mm-hmm. And it's more meaningful work. And then that's when I got into, or you can do insurance sales, which is kind of empty work. We have people who sell insurance and they're great people and we refer to them because we trust them.
Yes.
And they do a perfectly good job. So I'm not talking about them, but these insurance people that think they do financial planning. And then at the same time, they talk down to people like us who've taken the longer path, right?
That didn't go the sales route.
So I may have used little other words in there like sleazy salesman, and so.
Why not?
Oh my gosh. The reactions.
Bad.
Oh yeah. Oh yeah. I didn't read them. I mean, I read a couple of them and I responded to them. And then further down, it was like so many comments. There's
really?
like,
I
think there's over 100,000 views or something like that.
Oh dear.
For LinkedIn, that's like pretty big.
Yeah.
So I just kept, then I got really busy and I kept getting all these alerts, all these comments. So I just left it alone. And then one day we were in the break area and I was like, oh, right. And so I go back on my phone. It's like, oh, wow, these are really nasty comments. One guy was like, I could take my insurance sales company and I could run circles around your company.
Right.
I'm like,
okay.
It's like, okay, under what basis are you?
Yeah.
And then he's like, oh, all you guys talk about is assets under management. You don't talk about anything else, blah, blah, blah. But you know what's common, and I'm getting closer to looking like these guys, and I will acknowledge that. But what was interesting was there were no young people that made negative comments to my comment. It was mostly, I would say, late 60s insurance guys.
Yeah. Because that's the only way they knew.
Because that's the only world that they knew. They never evolved into financial planning. They just sell product.
Right.
And their product, their tool belt is made up of widgets not built by them, built by the company they work for, or honestly built by the industry. Even if they're independent insurance sales guys, there's only so many widgets you can put in that toolbox, right?
Yeah.
None of them were certified financial planners. A lot of them had CHLU, which is like the big insurance designation. It's insurance solves everything. I mean, you have to remember, I literally worked in that world for a year. It was horrible. We had whole meetings of, we have these young people now, and they're going to have kids, and then those kids are going to buy cars someday. And so you guys can push this whole life policy that you save into this whole life policy, and you can borrow from it to pay for that car. And you can borrow tax free from it. You still have to pay interest, and the interest goes to the insurance company. But we have whole podcasts that are centered around why this stuff is crazy. But I just thought that was interesting. Now I will say this: there weren't any. Nobody really wrote anything positive to my comment.
Yeah.
But my comment itself had way more likes than the negative comment. So we had a bunch of angry old men who are aging out, or maybe not. Maybe they didn't say well, but they're aging out of their industry. And then we had a bunch of people like my comment.
Yeah. Well, they're probably, you can almost expect that reaction a little bit, because we are such a small percentage of the industry.
4%. Yeah.
Yeah. And, I do think it is the younger people like coming into the industry, and they're like, wait, I don't really like how this is built. Like there is a conflict of interest. Like I think, and that's why we're also such a young firm, because we're the ones with the mindset of that. And it's very different it's hard to find someone already in the industry wanting to pivot, because that's the only way they know. And they're probably making a lot of money too.
Yeah. We go to career fairs. The line's so long at our career fairs because they know they've done the ones
especially
that
at
done
schools
the
that have the financial planning pathway. So it is. It's a different way to do the industry, but it's the one that benefits the client the most. So
I just couldn't keep my mouth shut.
Yeah. It's okay.
But anyway, if you want to see the comments and how ugly they were, you can go to my LinkedIn page and probably look at where look at who made the comment, or what comments I've made, because my comment was on another post, and then you could probably find it that way. But it's not really hot anymore as far as views. It's kind of simmered down. There was another lady had posted something similar, and I kind of gave her that a girl, and it was some of the same same demographic of people that were commenting negative on her, and I couldn't tell it's because she was a fee only advisor or because she was a woman. I didn't know what, but it's like, hey, I'm gonna stand up and help this lady. This is ridiculous that they would be saying such ugly things. I know. And yet, I don't expect anybody to do that for me. I have no problem standing on a podium by myself.
I'm sure. Island of one. Give it to me.
On an island of one with my sword. I have no problems doing that.
That's funny. Yeah. So we're going to go into what you were trying to defend in those comments.
Yes, absolutely. Yeah. All right. So let's talk about financial planning. And what we're going to do is walk you through our discovery, design, and delivery process. It seems really, really simple. We talk to prospects. I think we simplify it sometimes too much. It's like, we're going to do these 3 meetings. We're going to talk about these things. But it's very high level because you have 30 minutes.
For sure.
Right,
super high level.
To engage with somebody over why we think we're probably the best firm, best fit for them. So, after you've booked a consultation, you decide that we're a good fit for you. We immediately go into the gathering data process. So it's all pre-discovery meeting. We send you an email that says this is what you can expect to go through as you go through this process. Probably we send almost too much communication at the very beginning. I feel like we've been inundated with emails from different departments, but it's very clear as to what we're going to be doing. Really is gathering data. So that sounds so simple.
It's not, because we send you a long list of everything that we need.
Right. So the gathering data, I think at most firms, you're walking in with your brokerage statements.
Yeah, just like your investment statements.
Right.
And of course, those are important. We're going to be looking at those. We need the numbers. We need to know what you're allocated in, but we need so much more than that. I mean, pay stubs, even life insurance that you have outside or of work or what your work offers, social security statements. Not even, you don't have to just be claiming insurance. We need to know what you're going to have in the future because that's something that we project and look at. And there's so many times like we have this really long list and, there are the occasional clients that like give us absolutely everything and we're like, wow, star
Engineers.
student. Yes. But then, sometimes they'll come to the meeting and they're like, oh, I didn't know you needed that because they don't think it maybe pertains to them. And we're like, no, like, even though this may seem so far off to you, like we're going into the details of this.
Like the property casualty statements.
Yeah. Like, oh, you need my home insurance? Yes. We want to analyze it, look
and
at
then
it,
you
make
ask
sure
for
you
the
have everything.
decorations page and you get like the renewal statement or something.
Yes. Or the bill.
Or the bill. Yeah. They just send you the bill.
Like, oh, okay. So it is overwhelming. And we've heard that from clients sometimes like, wow, this is so much information, especially if they booked like 2 days out, which is honestly really hard to do these days.
Probably shouldn't even allow that.
Yeah. Like minimum, you need a week or a solid weekend to just hone in on it and gather everything that you need. But it is a lot. But we are looking at probably every inch of your life that you probably didn't even think a wealth management firm would do.
Current estate planning, if you have it, will power training medical directors. We have great software we run that through that gives us a good summary and helps us find errors
for sure.
But yeah, I think the W-2s is to understand pay and
what you're contributing to 401k.
Yeah, everyone says I'm contributing 10% of my 401k, and then you do the math. You're contributing like 3.
Yeah. Yeah. It's just someone to come over your shoulder, make sure you look at anything. But again, with the estate planning, me and William were going through a plan and the clients handed us their stuff, never been opened before. Like fresh wills.
Oh,
I was like, I've never, like 25 years old. And they're like, yeah, we've never looked at it again. I was like, well, they were like, we've had a kid since then.
They signed it. They put an envelope. They sealed it.
They never thought about it.
Never thought about it again. That's probably normal. But
of
not
course.
sealed in an envelope. That's
crazy. It was really cool. I was like, wow, I feel like I shouldn't be opening this right now.
Right.
But yeah, I mean, they sit it and forget it. And we're just the ones that are going to come in, make sure everything is still up to date. And so, yes, all of the documents are very, very important. Debt too, mortgage.
Yeah, that's right.
Car payments.
Minimum, not only just the amount of debt, but the interest rate and the minimum payment. Something that I think people have struggled with the most are company benefits.
Mm-hmm.
So your disability policy from your job, your
like what are your options? Let us go
insurance.
Through it. Yeah. What do you need to pick up the disability? So.
I think you and I in review meetings went through a little string of people said, "Oh, I do have long-term disability, but I never sign up for that at work." And it's like, oh, well,
because they may not understand the importance of it. So.
Thank goodness for Google schedule send on emails.
I know. The amount of times I'm like in a meeting and I'm like during November, October, whatever, I send little reminders, make sure you sign up for this. So
it's funny, it sends it out, then you get a response back later. It's like, oh, thanks so much, Grace, for reminding me of this. You're like, reminding you of what?
I know. I'm like, I don't even know what I just sent you.
Right. I sent it
Thank
9 months
for
ago.
that. So yeah, that's kind of the that's before the discovery is all that stuff that they're sending us. And then
that's before you even step a foot in the office.
We just make sure that we have all the information on our client profile before we start building the plan.
And that gets uploaded through a secure online cloud file.
Yes.
All right. So now we've made it to your first meeting, and this is these are pretty easy meetings for me. I mean, for the client, they're like, "Oh my gosh, I've been running here with all this stuff." You know? But for me, and I don't do as many of these anymore. Michaela, who passed her CFP yesterday. Woo, go Michaela.
Big accomplishment.
Huge. So Michaela does a lot of the planning on our team now. You support her. Caroline supports her. But that meting, we all kind of do the same format.
Yes.
Is that a fair statement? Because you work with all the advisors.
Yes.
we all do these in the same format. And that's on purpose. We have, or just a repeatable process.
Right.
But so typically myself or somebody like a Michaela William or a Shauna, they're going to basically start off with like, you're 80 years old. Well, there's a profile form, I guess, but once we got the basics, but I love asking the question, you're 80 years old, you look back in your life, what's going to be important to you? Because for the young families, they're just trying to get through the week, maybe the day.
Yeah.
with especially with young children, even kids with teenagers. Our schedules are so full.
Right.
There's just even my own mother-in-law sometimes says things like, "Well, we just never see you guys anymore." It's just trying to guilt trip my wife into, we never see you. And it's like, you don't understand. Like,
we have 3 of these things. We're going all the way around. I have my own schedule. We got 3 other schedules.
A traveling baseball person, a horse person, and a golf person. Like there's just no. Like, I don't even see my own wife. We're divided up trying to accomplish.
We're in the same house.
Different things, right? But so I try to get them, like, come out of that for a second and let's just think about, you're 80 years old. What's important to you? Like, what are you doing this for? Yeah, we all don't want to we all want to be financially secure and know that we can retire. We're not dependent on the paycheck anymore. I mean, that's part of it. But I think every planner probably asks that question. I want to know what's important to you. And that will change. If you're doing a plan with a 30-year-old, that's going to be different. But by the time you're in your 50s and 60s, you probably have an idea of like, okay, this is what I really want to be doing.
Right. Because you can see it and feel like probably 10 years away for retirement. What you're looking for.
And a lot of times it is a little cliche, but it's travel. We want to travel. We want to go to these 5 places.
But that's freedom, and that's a feeling, and that's very important to people. So
that's on their list.
How can we help you accomplish that?
There's 2 types of grandparents. There's grandparents that we raise our own children. It's time for them to raise their children. We're going to do the old things we've been wanting to do, and we'll peace out. We'll see you in 6 months. And then there's other grandparents that like, oh my gosh, these are grandbabies. We have to be there every day.
Yes. All the things. Yes.
So I see that 2 different types of clients. Neither one is right or wrong.
Yeah.
But the ones that are going to be buying stuff and taking entire families on trips, that's going to cost more. So the lifestyle's
so
different.
How can we do that?
So we're hunting for a dollar amount as we talk about those goals, but also just take a second, stop and breathe. Like what is important to you? What are you doing this for? What is the meaning of your life?
Which takes some clients back. They're like, yes, we're like confirming all of their basic information, and we talk about, when do you want to retire? What do you want to live on? All these sorts of things. And those are hard questions for a lot of people. They're like, what am I going to live on in retirement? Like, how much is that number? And people don't know half the time. And then we're like, okay, we're going to take a step back, actually, because we do just want to take you out of all the numbers and calculations and truly know, like, okay, what brought you to the table? Like, what are you trying to accomplish?
I mean, in fairness to the client, they typically come in because we're trying to solve a problem.
Of course.
Can I retire? Am I going to have enough money to do what I think I want to do in retirement? We're solving these problems. And so they're coming in as like, I need, or order of operations for as withdrawals, or they're having some tax problems that are bigger than just looking at one tax return. These are all problems that they come in with that we're trying to solve for them. So I wish, in a perfect world, that we just had a whole meeting just around goals.
Yeah.
Because after we've solved the problems,
right?
Because it's just kind of like you're lost and you're trying to go somewhere, and someone asks you, "What do you want to have for lunch?" You're
like, "What? I'm not even thinking about
I just need to find the airport."
Yeah.
In a city I've never been to. I'm really worried about lunch right now. And someone's sitting next to you going, "But what do you want for lunch?" This is really important. So it is a little bit of an awkward time to do it, but I think it has to be done at the beginning.
It has to be
from a financial standpoint.
Yeah.
But I think as especially the clients who don't do one-time planning, the clients that have a ongoing relationship with us,
right?
We catch back up on that,
of course,
in review meetings and
we're continuously, they're updating us on their lives, and we know what's going on a little bit more than we do with the financial planning only that kind of come in once and then
correct.
Just they can come in again a year later or not. So because
we don't know if we'll ever see them again.
Yes, sometimes we don't. We've had some 5-year surfaces.
Honestly, I think they all resurface eventually.
They do.
It's just how
we're
long.
just like, oh wow.
Yeah.
But that's a good point. The problems are different than goals.
So sometimes goals become more more short-term goals, and that's in relation to debt. So we really want all of our clients to be debt-free by retirement, and I've been doing this for 26 years, and I've learned that if you don't have debt, that it just makes retirement that much easier. Retirement it's really not always about rate of return or how much you have. It's really about cash flow.
For sure.
So if you have a dam and you're letting all the water out, what's on the other side of the dam is not going to get very full, right?
Yeah.
And it's the same way with cash flow in retirement. If you don't have much going back out that's required, then your reserves are going to build up,
Yeah.
or money's going to build up. Or when you let it out because that's money you want and you're going to go do things with it.
Mm-hmm.
So that's something that we really hone in on, is debt. And then for young people, it's like, hey, like, why do you have this debt? Let's get rid of this. Let's think about this differently. Let's go through 6 to 18 months of pain of paying all this off. But then after that, man, you guys are going to be
the weight lifted off of you. Yeah. And it'll help you reach your goals a lot faster too, because the cash flow that you can.
I have a existing client that came in last week. I think you were out of town, but he got into some debt, and he's like a couple years from retirement. And I'm like, gotta get rid of it,
right?
And he kind of fought me on it just a little bit, not rude in a rude way, but just like, I don't know, maybe I can do this, maybe do that. And so he emailed me on that Saturday and said, hey, I don't know if I want to do this. We get, I feel like there could be other options. I was like, well, there are other options. Let me lay them out for you. And I did all the math and calculated the tax implications of all the different ones. And then I sent it to him. He's like, yeah, I just want to pay all this off.
Yeah. Yeah. It is scary though, to see all that come out.
And then by Sunday afternoon, there's another email going, when do I get these funds? Because I'm excited about this.
Can you do it now?
Can we do this on a Sunday? I'm so excited about this. I'm so excited about being able to then now repurpose that money into in my 401k and other places. So sometimes it's just helping people go through that journey. The right thing to do is, and as practitioners, we jump right to it because we know, okay, this is what you're going to do. And
we're not attached to it either. We're just like, just pay it off.
Right. Where I think in his case, I should have gone a little bit slower and let him go through the decision tree journey with me, as opposed to me just saying, right, this is the best one. We'll talk about emergency reserves. These are, sometimes people come in with too much reserve, and sometimes people come in with no reserve.
Right.
It's
see both ends.
Yeah. I mean, we're making $500,000 a year and they got $5,000 in the bank. And you're just
we don't need any much more. We're like,
okay.
Does your roof need to be replaced? Because you don't want to put that on a credit card.
Right. So yeah, the emergency reserve is kind of a big deal. We talk about high yield savings. We get a lot of questions about that. I'm not sure why people question online savings so much. These are real banks. Yeah.
Maybe they look weird online.
You can't get physically
or maybe
drive
they're just,
to it.
Yeah. But they often do offer the best rate of return.
Yeah. In fact, a lot of the high yield banks I recommend, they do have locations. They're just not in Georgia.
Yeah.
They're in the Northeast or something, but you could drive there.
They probably just don't want to. Yeah, they're probably just nervous about finding something online, and I mean, it's better for them to be nervous, I guess, than just sticking it in something really quick, because we've seen that too.
So we've talked about your goals. We've talked about debt elimination. We talked about how much cash you need to have. Now we're analyzing all these documents you uploaded and asking questions.
Just confirming everything, making sure the numbers that we have also are what you thought that you had, or maybe we open your eyes to some stuff.
Super organized people, we're probably done in an hour.
Yeah.
Other families, maybe an hour and a half.
If we're gathering more stuff as we're sitting down, which happens a lot of the time.
Yeah. If you bring online logins in a computer, your own computer, that sometimes make things go a little bit faster.
Yeah. And we need investment options a lot of the time from like 401ks and stuff. And that can be hard to find. And it is beneficial for us just to like pop open the computer really quick, help them log in and get everything. So, but yeah, that's mainly what we go through, just making sure that we have everything we need to step into the next meeting, and make sure it's the most efficient for them as we start building the plan.
And there's a checklist for this. We provide checklists prior to the meeting so there's not, I don't think we're surprising anybody with what we need, or if they did, they just didn't have a chance to look at the checklist.
Yeah.
So that's the discovery process. Now we take probably a week to work on this in the background. And then we move into what we call our design meeting. And inside the design meeting, we start off right away with data entry. So we've taken all the information from meeting one. We've now put it into our software program. So there's three different types of software we're using. We're using financial planning software. We're using tax planning software. And we have estate planning software. So 3 separate things. 2 have some AI built into it that helps us work a little faster. Also helps us find mistakes or things that could be done differently to the client's advantage. And the other one is just more data in, data out, kind of a setup. So that takes a little while to go through there. We for the third time in the process, we talked to you in a consultation. We've asked you what are your hopes and dreams, and we've talked a little bit about that and goal setting in our second meeting, and then in the third meeting we do it one more time.
Third time's
And
a charm.
we ask you to visualize yourself in retirement. And there's these check boxes that we go through in the software. And honestly, people like, yeah, I think I've only had one person. I think most people just kind of go along with the process.
Mhm.
I think I have one person that said, I've told you this already.
Yeah.
So
Yeah.
that shocked me a little bit. And
Yeah.
I was like, oh, okay. So I always start off my meetings with, I know I've already asked you this twice, but this is the third time because sometimes we get 3 different answers.
Mm-hmm.
And so now
And like they're also still thinking about it. Probably something new
Yes.
could come up.
That's right.
Yeah.
Yeah. So we ask you for the third time, hey, envision your retirement. What does it look like? Are you active? Are you more quiet lifestyle?
Are you part-time working? Do you want to keep doing something?
Do you have expensive
Um,
hobbies?
Yeah. Do you want to travel? All the things.
Charitable? Yeah, all the things.
Are you gonna be bored?
Yes.
All the things.
My favorite question is the last one in the last section. It says, your concerns for retirement.
Yeah.
And one is too much time together.
Yes. That's always a fun one.
You guys worry about too much time together. And yeah, it's 50-50. Half
is.
people are like, absolutely. Like, I don't want him in this house.
Yeah, they're
all
like,
the
oh
time.
yes, click that. The others are like, what? Never.
Right.
It's like no in between.
No, yeah, that's right. It's either one or the other.
Before we jump back into the episode, do you know if you are ready to take off and launch into retirement? Get your pre-retirement checklist, a free guide from Wiser Wealth Management. From cash flow to Social Security, we've got your countdown covered. Go to wiserinvestor.com/guides to download your free guide today. Now let's get back to the episode.
And then we hop right into retirement projections based on your current assets and savings rates. So this is the fun part because we prepare for it, but we can't really finalize it without you.
Yeah.
So
we want your input. Is this what you thought it was going to be?
Yeah,
or
so-
we can change it.
So now we just went from like accounting
Yeah.
and now it's art.
It is. It's fun, honestly, because you
Right.
get to change it.
So there's this blank canvas and it starts off with, this is how much you have saved, this is how much you're saving, and this is where it's taking you.
Hmm.
And we're going to take into account inflation, which is we use 2.5%. Healthcare is a separate line item for
Right.
expenses in retirement. That's 5.3% increase. And then we can add all the other goals we want to.
Yeah.
Sometimes we have to add long-term care costs. Sometimes we add
Travel expenses.
long-term care insurance costs, I should say.
Yeah.
We add travel expenses. We paying off a home, buying a second home.
Yep.
I mean, the list goes on.
Weddings,
and on.
too. I've
Yeah,
seen
that's
a lot
right.
of that
Weddings, cars.
In retirement. Yeah.
These are all the things that get added into this goal board or financial goal board.
Hmm.
And from there, the client is very interactive. So the client says, "What about this?" or "What about
Yes.
that?" or "What if I work till 65? What if I went to 67?" Well, wow, this looks really good. What if I quit at 60?
Exactly.
And it's like, oh, that's good. What if I quit at 55?
Yeah. And we have them all lined up. Like we have your different scenarios, most of the time one by one next to each other so they can actually visualize the differences between both. Like, okay, if I did work 5 years later, I could spend more more money in retirement. But do I really need all that? Like this is all going on in this one design meeting, which is really fun because especially if they have options. And even if it's the plan doesn't look like how you wanted it to, we're not going to leave the table until we have a plan that you're comfortable with and that's also successful in all the different calculations we run. So you're going to leave it either knowing what you need to do to make something happen,
Mhm.
or you'll leave knowing that like, okay, I've done a good job. This is still what I thought it was going to be.
You know what's cool is we work on so many plans. We have a traditional assets under management business. Well, we call it wealth management. That includes all this planning that's done on a regular basis. And then we have people who come in and pay a one-time fee for a one-time plan.
Mhm.
Because of that, our advisors are working on 9 to 12 plans a week. So you think about all of our advisors now are super seasoned, very, very good at what they do. Planning associates, think about where you are now, Grace.
Yeah.
And yet how many plans you touch every single week. You've been here
A year and a half, maybe.
year and a
Yeah.
half. So the closer you get to 10,000 plans, you become the expert, right?
For sure.
So you're touching 9 to 12 plans per week between holidays and vacations. We probably work 44 weeks out of the year, right? That is a lot of plans.
That's a ton of plans.
That is a ton of plans. So that I think that gives us an advantage. One, we're helping our community with people who either don't want to pay an asset management fee, we don't think should be paying an asset management fee, or they're in a position where they don't have assets to be managed because it's either all in a 401k or if they just don't have assets yet. So that those one-time plans really help our firm become experts in our craft and what we do.
For sure.
We're a normal wealth management firm. Even, you're a big box company, you are not touching that. You might touch 3 plans a month.
Yeah.
Maybe.
Yeah. So we see a lot of different things too. And it's not like we have like some average client that comes in like, oh, this is just data in, data out. It's like everyone is so unique in how they want to run their plan, and everyone's goals and aspirations are so different. So we get to see a lot of different things. So it's like, you can bring something up to us. We're not gonna be like, oh, we've never seen that before, because we probably have.
Yeah.
Just
somebody
in many different
in this building has.
Yes. Yeah, exactly.
Between 18 of us, somebody has.
Which is probably comforting to the client too, because that can be very scary to them and overwhelming. And then we can just, take the pressure off. Like, it's okay. This is how we handle it.
I think financial planning, I don't know. It's all so unique. I was about to say financial planning can be a little more talk to the masses. You could talk about financial planning, but honestly, you think about all the airline pilots we work with. Airline pilots love teachers and nurses for some reason, and both those tend to have pensions. And so they're planning versus like the other segment that loves us a lot is business owners. We have so many business owners here. They don't have pensions at all.
Yeah. No.
We're trying to figure out the valuation of their companies so that we can do good planning around that.
Yeah, their plan looks totally different than an airline.
Yes, exactly.
So you can't speak to the masses when it comes to that. Like maybe some things, but
definitely not in taxes.
No, never in taxes.
Everybody has a different tax scenario.
Yes.
I had a phone call last week. Someone said, "Oh, I have a buddy of mine. He's been doing this, and I was thinking I need to come in and see you because I'm not doing that. That must be the better way to do it."
Yeah.
And I said, "No, every tax strategy it's like a thumbprint.
Yeah.
It's unique to each person. Everybody has a different twist to every single person or family.
Exactly.
So knowing that when we go in to start these retirement projections, everything's it's just a little bit different.
Mm-hmm.
It starts kind of
tailored to you.
It starts generic because we don't know you.
Yeah.
But in that meeting we
learn a lot.
And so then we start crafting it based on your exact situation. So this is kind of where we talk. We've already talked about debt. We talked about savings at this point. We've talked about retirement projections. Assuming, college planning, I typically put in the last meeting, but every family is so different on that. So we'll get that to eventually. But then and sometimes we go, oh, wow, you actually have more than what you need for retirement.
Yeah.
And so then we call any additional dollar opportunity money.
Yeah.
And so opportunity money is really fun because that means you've just talked to a person that they've checked all the boxes pretty easily. But now he's like, okay, what do we do with that extra $1 or that $20 that keeps disappearing out of your pocket, right? So the opportunity money, that's where the real estate conversations come in, or alternative investments, or just building up an account that is not related. That's not really related to retirement, but something's going to come up, an opportunity.
Yeah.
See what I did there? Opportunity will come up, and you have the resources to then go and execute because you've been saving those extra dollars that don't need to be used.
Yeah, and this is also on top of like your standard emergency fund. This is money on top of that, so like it's invested. It's not just sitting there. So it has the opportunity to be something big, like buying a second home that you never knew you could actually afford, and so it is really cool. Or buying a new car that you've always wanted. Like it can be endless opportunities.
Yeah, anything.
Yeah.
Preferably things that appreciate us and not depreciate. But there is,
yes, you can do it.
You still gotta have fun. It's like it's like dying happy or dying healthy.
Yeah.
It's a very fine line.
Okay.
Right?
Yeah. Sean is not gonna like that.
Sean is not gonna like that at all. Everyone must die healthy.
Always healthy.
I go for my weeks of healthy, and I have weeks of I love I love pecan pie and Krispy Kreme donuts.
Yeah.
I grew up in the South, you know?
Right. You gotta have a little sweet treat. But yeah, there's also the other side of that. We don't always, of course, see people come in with all this extra funds that they can save to an opportunity fund. Like William and I did a plan, and that was not their situation, and that's totally okay.
Yep.
And they were so tense in those first couple of meetings. Like they were just like, I'm sorry, like we're just all over the place. We were like, it's okay, like we don't care. This is fun. Like this is like we just want you to be comfortable here. Like we're not judging. Like why would we judge at all? But people come in like that, you know, because you don't always have to have like a substantial amount of money when you come in here, you know, because we are doing one-time plans.
Yeah.
And I feel like when you're walking into a wealth management firm, people are a little scared. Like, oh, I'm going to be judged. Like I don't have $2 million walking in, but it's okay. Like we're trying to help you accomplish whatever it is that you have set in your mind. And so they had a situation where like, okay, should we pay? They were so close to paying off their mortgage. But they were like, they had so much debt that needed to be taken care of for them to be able to save for retirement properly. And so we left the design and you could tell that they were just a little defeated. But then by the time we got to the delivery, they were fired up. Like they were so excited just to like hone in on the plan. Like William had outlined everything. And they were just excited to like, you know, it's a relief to get rid of debt. Because I don't think you realize how much it weighs on you.
Yeah.
And they were so excited. And William's like, oh, thank goodness. I'm so glad. Like, we're all on the same page. Like, I mean, they were above the page that we were. Like, we had no idea what they were going to come in saying. So, and we see a lot of plans like that. And it's just encouraging, even as a planner, knowing that, like, we can help you in a circumstance like that. Like, feel more comfortable and amped up. And, like, we're going to be checking in with them moving forward, just making sure that they're doing well and working towards the goals. But so there are people with lots of extra income. There's people that aren't, and they've got to start tightening up and work towards something. And so we've seen it all. So
yeah, that's the again, that gives the benefit of we seeing so many plans that we do.
And this is all talked about in the design.
Hundreds of new plans a year. So it like gives us perspective. So once we have that part of the meeting where we talk about making sure retirement's on the right path, opportunity money's there, or could be there in the future. Then we just try to break everything at this point in the same meeting.
Right. So it's all in one meeting, everyone.
So now we try to break it. So we're running 1,000 stock and bond market scenarios. We're not using like, oh, this works if you get an 8% rate of return per year. No. Like that's not realistic. You want to assume a higher rate of inflation than what probably would happen. You want to assume a lower rate of return. And you want to allow people to delay Social Security. So those are three things that most advisors aren't going to recommend, simply because it doesn't really benefit them.
Yeah.
But if you don't have a dog in the fight, you're just looking, you're getting paid by the client to help them.
Yeah.
Then your advice tends to be a little bit different. So we're looking at 1,000 different stock and bond market scenarios come up with the probability. I typically want that up between 82 and 85%. Chance of not running out of money before age 95 is typically what we plan to. The reason why it's 85 and not 100 is because, again, the plan's so conservative.
Yeah, we're already so conservative.
That you're going to leave millions and millions of dollars to the next generation. Maybe you didn't live your best life.
Yeah, and you're living on nothing.
So you want that. Some people get all. Some people have large estates and pass on. But for normal people, I would say that we want to make sure that they can make it to age 95. Yeah. Is what we're looking for. And then you think about other things that could possibly derail you. Disability. So if you were disabled, that's more likely of you being disabled than dying.
You to die, yeah.
So if you're disabled and you can't work, an acquaintance, not a client here, but an acquaintance of mine was misdiagnosed at the hospital of a stroke and ended up being permanently disabled because they didn't treat him properly. And he had other complications, so it's not like a cut and dry lawsuit, I don't think, although I think they should probably take legal action. But they all of a sudden husband can't work, wife has to go back to work. And the disability was 50% of his pay. And you think, oh yeah, 50%, that's not bad. Until you actually have to do that with young kids.
Yeah.
This is a person like under 50 years old.
Yeah.
Yeah. And so if you're not budgeted for that, then that disability and that also too, your medical expenses are going to be skyrocketing most likely. Yeah. So that 50% is probably just covering
that
most of your medical.
Right.
So those are things that, or you may not have medical. You have to go on COBRA because you don't have the job anymore.
Mm-hmm.
So there's so many variables that people probably have exposure to. And unfortunately, the only people who are selling that are insurance people. And they walk in with like scorch the earth mentality of like, you need as much disability as you can possibly buy. And you're looking at $800 a month for disability. That's crazy. So you got to put a realistic lens to it and figure out what the reality would be.
Mm-hmm.
And so that's that disability conversation. It's easier. That's a harder conversation of the three between disability, life insurance, and long-term care.
Yeah.
Life insurance, it's more of a math problem. We don't typically recommend these permanent policies. We really like to see you building your own net worth through investments, either investments, real estate, all the normal things. And then life insurance, we want to see term typically until retirement age. I think all of our retirees, well, I'll say most, since I probably won't remember every single family at this point, don't need life insurance.
Yeah.
They've saved up enough over the years that they
so
don't.
it just falls off in retirement.
That's correct.
Yeah.
And a lot of times we got sold permanent policies because a death tax, but now your net worth has to be over $30 million before we're worried about you paying estate tax as a married couple. So there's a life insurance component. If we need that life insurance, we don't sell it. We don't sell any products. So we're going to refer out to one of our partners that will sell you a policy, and doesn't act like these people who are coming on my LinkedIn page.
Yeah, and they'll take really good care of you. We connect you in an email, and we tell them exactly what you need, so there's no confusion on your end or their end. And then they send back the quotes that we're copied on, and we help you go over them. So it's a pretty seamless process if that is something that you need to get added on.
Yeah, and then long-term care is an additional conversation that we have. So if you're above the age of 50, we can start looking at that a little more closely.
Yeah.
55.
But we do look at it no matter what. But
we do, but sometimes it's a 30-second conversation and sometimes it's a 30-minute conversation.
Because some people are also more worried about it than others. And so if that is, one of your worries, then of course we're going to walk you through it a little bit more than someone that may not. And if you have in your family too.
Yeah.
Like if you've had a parent go through that and maybe have had a bad long-term care policy, you're obviously, you're more familiar with it than you'd probably like to be. So you want to make sure that you're also taken care of. So we talk about it.
We have a client recently who's very stoic and she never needs help, but she did say, I need to go to assisted living. Mm-hmm. So she went to assisted living. I was like, great, you have a policy for this.
Yeah.
It'll pay $6,000 a month.
Right.
And she did the interview for the policy. And they asked her, do you need help going to the bathroom? Well, she's not going to tell somebody that she needs help going to the bathroom. She's like, no, I can do it myself. Because she doesn't know this person who's interviewing her. And then, but she can't. Yeah. She has to have help. Do you need help showering? Oh, I can shower on my own.
And she can't.
And she can't. and then they were like, well, do you need help, moving long distances? It's just like, no, I'm doing very well. How are you?
I already know who you're talking about.
She got denied the policy.
Of course.
And she's like, why do I have the policy if I just get denied if I'm here? And it's like, because you answered all the questions incorrectly as to what's actually happening.
Yeah.
There's so many different types of long-term care now. Even if you don't qualify for the insurance-based long-term care, like the permanent policy or kind of like term and how they do, you pay every month for your entire, or every year for your entire life. And some policies are paid up. They even have annuities now that are twisted into life insurance. And that sounds horrible, but if you don't qualify for the others and you have extra assets, like maybe opportunity money, you could fund it. And you'd get like 3 or 4 or 5 times that amount back in long-term care payment. And if you pass away, the money goes on to the next generation. So it's not completely lost.
Right.
Those are policy. Of course, the downside is that money's out of the market. It's not earning anything. They basically give them a free loan. Mm-hmm. But if you needed it, it would be there and it would fill in a gap and protect the rest of your net worth. So those are policies. Again, we don't sell any of these policies. We just help you sort out and pick one. Again, it'd be the same couple of firms that we use that would sell those. Mm-hmm. So that makes up a design meeting. That's a lot. Your head's spinning, honestly.
Yeah, we go over a lot of stuff.
And I think that's probably the family you use. You said we weren't really sure after design meeting how they were feeling. It's because they're trying to process it all.
Yeah.
But once you process
a couple days.
You come back the next week for the delivery meeting. And inside delivery, we're going to start off with college planning. Every family does a little different. We have families that say, I paid for my college, my kids can pay for their college. We have some say, well, I have $50,000 saved up for them and they can use it as they wish. And other people are like, no, we got to cover 100% and they're going to Harvard. So it's all over the map, and there's not a wrong way, a right way to do it. The wrong way is probably just not to have a plan and not even discuss
and wing it.
Wing it and not even discuss what the child's options are. I feel like if you lay it down at the very beginning, even in the beginning of high school, and say, this is what you're going to have saved, this is probably the schools that we can pay for. Then you can. It's
an easier transition into that.
Easier transition, but also get your studies in line for what your options are.
And we have really cool software for that too. It's like we're putting in the kid's date of birth, where they potentially want to go to school. And I ran one just because, if you have kids, I'm like, I'm going to run it for you. But there's like a 1-year-old, and I was like, I don't know if this is really helpful. I'm like, do you know where she wants to go to school? You can just put a 4-year public or out of state or private, but we can also choose the specific school if this is something, if they're like in high school.
If you went to Princeton and gosh, your kids will be in Princeton no matter what, then we
will tell you exactly how much you need to save in order to fully fund it or halfway fund it. So it's a really cool software that I think takes off the pressure of the parent knowing like, okay, now because what other softwares are out there to do that? Knowing a specific school and all of that.
Correct.
You have to run the numbers yourself.
Correct. And the inflation rate. So our software tells us what the average inflation rate is for that school and tuition.
Yeah. It's really cool.
And adds in all the stuff they don't tell you about.
I noticed that you just figure out as you go.
I know. I've noticed that at my kids' school. It's like, oh, this school is X amount per year. And then you start getting the bills. And it's like 20% more than that. There's the parking fee. There's the the sign up fee, then there's the sign off fee, and then there's the sign in fees. All these sign fees. I'm like, oh my gosh.
As a student, I was like, hey, Dad, I need like $600 just to park on the property.
Exactly.
There's a lot of hidden fees, so we'll help out with that.
So those conversations actually are pretty straightforward in most situations. So then we go into tax planning. Tax planning is a little more involved than you might think. So this is where maybe some asset location comes in. So we kind of tax planning is a little bit of a cross of portfolio management and traditional tax planning. So we're looking at, last year's tax return, what happened with that. But then more importantly, we're more focused on how do we have the most tax efficient retirement?
Yeah.
And so that could be saying, hey, in your brokerage account, your /opportunity money, you have ETFs, but you could really be doing direct indexing, and you might be able to create $30,000 worth of tax credits every year. If you have enough, if you had probably $750,000 or more in a brokerage account outside of investments. So you might be a good candidate for that. And let's rethink how we're investing for the future. Or you're going to have a large brokerage account. That means when you're 65 to 75 and you're not working, your income could be really low if you lived off your brokerage account. And then you could convert from IRA to Roth during that time period. Those are all the things. Then where should you be saving your money? In your Roth 401k, inside of your pre-tax 401k, or into a brokerage account? Do you need to be doing backdoor Roths? Do you need to be doing mega backdoor Roths inside a 401k plan if your plan allows for that? These are all things that you need. You just can't decide based necessarily on what tax bracket you're in. That's a part of the equation. But also, what tax bracket will you be in? In the future,
and we'll see that.
And then we're basically doing those future returns and coming up with a average tax rate to then help us make a decision on where you should be saving money based on the current tax code. One thing I will say you need to be very cautious of is a lot of people do this tax planning, if they do it at all. They do it and they say, oh, well, the deficit in the U.S. is so high, we're past $39 trillion. Taxes have to be higher in the future. No, they don't. No, they don't. And I think it's not a good idea to be doing your tax planning with the assumption. You need to do tax planning with the reality of what we're in right now.
For sure.
And that's the current tax code. You always plan on the current tax. You know how many times I've seen things in committees and say, oh yeah, this is definitely probably going to get passed. They never make it out of committee. And if we had to plan to everything that might happen, you wouldn't know which direction they're running in. So you plan on with what you know.
Not
so when a Secure Act 2.0 comes out, we have to dive into it and figure out what's changed. How does that benefit our clients or hurt our clients?
Mm-hmm.
Those are all things that we're continuously doing for our wealth management clients. But those are things that are you just have to pay attention to.
Yeah.
Not, at traditional firms, I feel like they get your assets and they're just going to manage the money, and the dude's out playing golf someday. When was the last time you saw me take a day off to play golf? So you need to have a team that's paying attention to those things and doing real monitoring of tax and planning changes, because that all intertwines with asset management. It's not just about managing assets.
For sure.
So after we have our tax conversation, we're looking for underpayment penalties. I'll add that. I see a lot of families that don't pay enough in, and you're like, oh, you paid $500 in a underpayment penalty. If you just adjust your withholding by X amount, then you won't have to worry about that. It's $500 you keep in your pocket.
Yeah.
So it's just a little fine tuning of things. I also find that CPAs aren't doing as much planning anymore. There's more, they just do tax returns, and people think that's planning, and it's not. Then we would talk about estate planning. If you already have estate planning done, we're simply reviewing the work and trying to determine if there's any changes that need to be made because of laws, or changes that need to be made because that we have, family changes. If you don't have it, we'll talk about different structures, the plus and minuses of a revocable living trust, or do you just need a basic will? These are all things that we will discuss. If we need documents prepped, we have attorneys that we partner with that would then help you actually sign new documents.
Yeah.
And then finally, you think we talked about this sooner, but finally we talk about portfolio allocations in our delivery meeting. So now that we have all this information under our belts, now we can actually make real portfolio recommendations for 401k plans, how we invest your assets here at Wiser. These are all the things that we come up with. And we basically draw out a investment policy statement for our wealth management clients and say, okay, this is how things should be managed going forward.
Mm-hmm.
And everyone signs that. So our team understands what the objectives are of the portfolio and the client. So everyone meets the expectations that they have of our relationship. If you're a one-time planning client, we're simply giving you allocations to DIY yourself.
Telling you how to do it. Right.
Yeah, exactly.
And we'll even help you, because I know that's sometimes confusing for a lot of clients. Like, even if you have your laptop with you, like, we'll help you like put in the percentages, that kind of thing. A lot of times it is straightforward, but I mean, also making sure you're doing your current allocation and your future contributions, because sometimes we have people come in a year later and like they still had their old allocation kind of in there, only the future contributions are going. So it's just very detailed things like that we're also trying to pay attention to.
Yeah, it's delivery meeting is more of we're still talking about some heavy topics, but not as heavy as the middle meeting, but it's definitely more of a wrap up and execution plan. So here's a summary. These are 5 things you should do in the next 100 days. Mm-hmm. So we're giving you a 100-day action item plan. We're giving you access to the plan online. You can move all the dials yourself. You can run hundreds of reports. So now you have access to one of our online tools. And it really helps. Sometimes we have to revisit the planning, the retirement planning part of the meeting prior. The client has other ideas that they've come up with. Yeah. So sometimes we present problems in that meeting and they come back to this meeting with, hey, we've thought about this. I think we can do it this way.
Yeah, exactly. And I mean, of course, there's going to be continued conversations between us if we did refer you out to people as well. Because a lot of times you don't get the quotes for the life insurance back until after delivery. Or we also double check on, we refer you out to get our property and casualty reviewed, and how did that conversation go? What were those action items? We make sure we put those down there. And you could be meeting with an attorney that you could meet with in the office, and we're also alongside you on that, making sure you know who you want your beneficiaries to be, how those are going to be allocated in the future. So very, very hands-on, and make sure we follow up.
Some people get a bonus meeting. This is called business planning. Typically, all business planning is always done with me.
Yes.
Because I'm an entrepreneur, business owner. And this is where we're diving into bylaws and operating agreements and your succession planning, looking at your P&L and your balance sheets, and we can learn from that. And we just nerd out on business stuff for about an hour and a half. Mm-hmm. And I love those meetings. I don't really prepare for them because everyone, it's winging it. It's just everyone's so unique.
You can't prepare.
No, you just walk in the room and say, let's talk about your business. And of course I have key things that I ask. but it's just a conversation. Every business is like its own living, breathing,
and how they do it.
Mechanism, and it's and how they do it. And sometimes I feel like I have to really encourage people and say, like, you need to be doing this, you need to be doing that. If you want your business to be worth something, you need to not make it about you.
Yeah,
you need to have. Can your business operate? Can you go on vacation for a couple of weeks and let your business operate?
Yeah.
And what would happen? So it's these are fun conversations. We charge a little more for that component.
Business
and a couple of times that those meetings have recently, one of those meetings drew out to 3 more meetings because of all the work they had to get done. But that is a component that gets added for our business owners that go through not your little hobby businesses, but for people who the 100% of their income comes out of their business planning. So I think that this is you realize how much we do. This has become a long podcast now.
Yeah.
But I think the important things, these are things that, in my opinion, sometimes not business planning, because most financial advisors aren't also business owners, but the rest of these components, every financial advisor should be doing. And this is what's wrong with our industry, is only 4% of us are doing these things in depth.
Yes.
In depth. And 4% that also aren't trying to sell you products. You have to be careful with some firms that will go through some of these steps with all they're trying to do is find things that they can sell you. So that's why you have to ask at every beginning of every new relationship within a financial, are you fiduciary and are you fee only? Yeah. And if they say yes to those things, then I think you probably have a pretty good person, assuming they have people around them that are super smart and can tie all this together. Yeah. But anyway, we'll wrap this up. Thank you, Grace, for doing this little journey with me.
Yeah,
and thank you, listeners, for sticking with us. And we'll see you guys again next week on the next episode.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.